Bitcoin just got rejected at $80,000 and slid all the way back down to $76,000 in a matter of hours. That is not even the biggest story today. XRP just broke a 200-week support level that has held since 2024, opening a 47% drawdown gap. BlackRock and Standard Chartered just plugged tokenized Treasuries straight into OKX. State Street is launching a tokenized fund service in Luxembourg. And Visa just teamed up with WeFi to test on-chain payment rails. Stick around for Story 5. It is the most underrated signal almost nobody is talking about, because while everyone is staring at red candles, the biggest payment network on Earth is quietly going on-chain. Okay, so look, here on Crypto in 60, let us dive in. Quick note before we start. If you want 5 stories like this every morning before markets open, hit subscribe. It takes 2 seconds. Now let us start with Bitcoin and that brutal rejection at 80K. According to Coinatag's technical breakdown, Bitcoin tagged the $80,000 resistance, got rejected, and slid back to $76,055, a 2.33% drop in one session. The RSI is sitting at 55, which is, dead neutral. But the super trend just flipped bearish. Strong support is at $72,809, and the next resistance overhead is $76,836. Now here is the part that matters. Open positions in the derivatives market actually decreased during this rejection, which means traders are de-risking, not piling in to short. That is a signal of caution, not panic. If 72,800 breaks, we are looking at a much bigger flush. But while BTC is taking a breather, XRP is doing something far more concerning. You Today is reporting that XRP just slipped below its 200-week moving average, a level that has acted as concrete support since 2024. And look, the technical structure now opens a 47% gap back to 2024 levels. That is the bear case. But here is where it gets, complicated. Because at the same exact time, $25 million in fresh institutional inflows just hit XRP products this week. So you have two completely opposing forces. The chart is screaming breakdown. The on-chain flow data is screaming accumulation. Bears say the 200-week breach is a death sentence. Bulls say the smart money is buying the technical fear. And honestly, I do not know which side wins this one. If the inflows keep coming, the chart lies. If they dry up, $1.37 becomes 90 cents fast. The next week tells the story. Speaking of institutions, wait until you hear what BlackRock just did. Bitcoin.com is reporting that BlackRock and Standard Chartered just powered up OKX's tokenized Treasury collateral system. What this actually means is institutions can now post tokenized US Treasuries as collateral on OKX, keep earning the yield, and trade against it, all under regulated custody from Standard Chartered. This is, real plumbing. BlackRock's Butyl Fund is the anchor asset, and Standard Chartered handles the custody side. So institutions get yield, leverage, and compliance in one package. That is the holy trinity Wall Street has been waiting for. Now, real talk, are you actually paying attention to the tokenized real-world asset narrative, or are you still chasing meme coins? Drop it in the comments. I read every single one. Because while you are watching candles, BlackRock is rebuilding the entire collateral system on-chain. And speaking of that shift, State Street just made an even bigger move. Bitcoin World is reporting that State Street, one of the largest custody banks on the planet with over $40 trillion in assets under custody, is launching a tokenized fund service in Luxembourg by the end of this year. Luxembourg is the European fund capital. That is where most of the regulated investment vehicles in Europe are domiciled. So State Street is basically saying tokenization is no longer experimental. It is the next operating system for asset management. The press release confirms the platform will let asset managers issue and service tokenized funds with full regulatory compliance built in. $40 trillion in custody, and they are pointing the rails on-chain. This is not a pilot program, this is infrastructure. And while State Street builds the back end, Visa is attacking the front end. Investing.com is reporting that Visa just teamed up with WeFi to explore on-chain payment use cases. Now think about this for a second. Visa processes over 200 billion transactions a year and connects more than 4.5 billion cards to over 150 million merchants worldwide. And they are quietly testing the rails to move that volume on-chain. The collaboration focuses on stablecoin settlement and programmable payments, the two killer features chains like Ethereum and Solana have been building toward for years. While retail is panicking about a 2% dip, the largest payment network on Earth is rebuilding its core product on top of crypto infrastructure. The real question is whether you are positioned for what comes next. By the time the headlines catch up, the move is already made. To summarize, Bitcoin rejected hard at 80,000, XRP breaking its 200-week support, BlackRock and Standard Chartered powering tokenized treasuries on OKX, State Street launching tokenized funds in Luxembourg, and Visa going on-chain with WeFi. The price is red, but the institutional plumbing has never been more bullish. This is not financial advice. Always do your own research and never put in more than you can afford to lose. If this saved you an hour of scrolling today, subscribe. That is what I am here for. 5 stories every morning, no fluff. See you tomorrow.